All right, folks, weekend's over. Back to work we go. We get some money to make this week and a big week ahead of us, right? We got FOMC on Wednesday. We got quad witching on Friday. It's going to be a busy week. And maybe you noticed already, we have a breakout of that big range we finished the week with last week. So range breakout is a big clue. What does that tell us? It means breakout pullbacks are where the money is made tomorrow. I have a couple key levels on my radar for tomorrow. I want to talk about timing entries for entry tactics tomorrow. So as always, we're going to cover all the details. I want to make sure you have a roadmap to make some money on Tuesday morning as well. So as always, thanks for tuning in and watching. Enough of the intro, right? Let's dive in, make some more cash on Tuesday morning. And boy, charts look fantastic right now. S&P SPY ready to go tonight. Nasdaq triple Qs are ready, aren't they? I've got 4 clues on these charts telling me where I think the money is made on Tuesday morning. The first clue is obvious. It's right here on the hourly time frame. It is clear to see right now the buyers are in full control on the S&P SPY. Clear control right now. The Nasdaq triple Qs. The first clue, I like to use the hourly chart as a directional filter. It's pretty obvious right now. Buyers have full control of momentum. The second clue is over the calendar for tomorrow. Tomorrow we do have not the biggest news of the week, but a pretty big news report, if you ask me, that retail sales number, right? We're going to see if consumers are struggling with the increasing inflation costs, right? That's definitely something on my mind tomorrow. But don't forget, though, the big news of the week is that FOMC announcement on Wednesday. So you definitely want to make sure you come back tomorrow night and we'll prep together for the FOMC announcement. They might be cutting rates on, 50 basis points on Wednesday. We'll talk about that a bit more in tomorrow night's video. But retail sales tomorrow at 8:30 Eastern time. That is our second clue. Expect some volatility in the pre-market. Now let's dive in. I got 2 more important clues right now. We know we're bullish on the hourly chart, but there's 2 more important clues right now on these tick charts. Now remember, guys, tick charts, they make entry timing easier. Get yourself some tick charts over at ninjatrader.com. That is a 7,000 tick chart, all the time frames, upper left-hand corner. And in case you're wondering, that yellow line right there was the only indicator we need to make consistent profits. That is the 21 EMA. Now, there's 2 more important clues here right now. First clue is this trading range. Now, remind me again, folks, what do ranges do? Ranges like to rotate up, down, up, down, up, down, up, back and forth. We like to use symmetry, right? Like pendulum swings, the amount below, the amount above. I love to use triangles, right? Expanding triangles are megaphones. Clue number 3 overall, it's a range up there. And we know ranges, they love to rotate back and forth with symmetry. My favorite clue, though, for tomorrow, and you probably see it already, is that range back there, right? This was the range that we finished the week last week. Well, you'll notice right away, they have a very obvious range breakout. Now, one of the most consistent things I know about trading, breakout pullbacks are very, very consistent. And so that whole area down there, 56, a bunch of levels back here. And there's something similar to the Nasdaq. We'll have the Nasdaq here in a moment as well, if you're a Nasdaq trader. So think of all these clues right now, right? We know we're bullish overall. I've got this range up overhead that wants to rotate. And I have this previous range down here begging for a breakout pullback. So I think it's easy to see why. It looks like breakout pullbacks are probably where the easy money lives on Tuesday morning. Now, how do we time the entries? For example, I would love to get a nice deep pullback down into that breakout pullback zone. But, guys, I don't know how far that pullback will go. It might bounce here. It might go all the way down to those lows. I don't have a crystal ball. So rather than trying to pick a bottom on this, and I'm not going to waste my time on divergence or reading tape, I like to use traps. For example, what I'll do is I'll wait for a pullback into that breakout pullback zone. Then I'll let sellers come in, let them try twice. Now, the key to this is you want to see them try once, twice with a higher high in price. Once those bears commit twice, now I know where their stops are. Think about this. If you're short and you get stopped out, what happens? You buy your way out. My first mentor would always say, Joe, think about where their pain is and buy right into that pain. Now, my trade room, we call these bear traps. The bears try once, bears try twice, and we buy into their stops. Now, remember, this range up top here, this range, it wants to rotate, right? So we're not just trying to go back to the highs here. We're now trying to find that symmetry, right? The amount below, the amount above. Okay, this is why I love ranges, because now, as this market now rotates up off that low, look for an add-on trade. Now, add-on trades, these are very simple. First things first, I want to see separation off that moving average, like over there, right? See how it separates away from the moving average. It doesn't pull back all the way to the moving average. That separation tells me now higher high in price, underneath that low. I call this an add-on trade in our trade room. It's a technical bear trap like I teach in the free video course. Look over here right now. Look what happened over here. We go up, shallow pullback, higher high in price. Is there anyone surprised that everyone bought below that low? This is the same basic pattern. It's just a smaller version. I'm looking forward to add my winner over here. So one of my favorite breakout pullback trades for tomorrow is a bear trap and an add-on. I will take some profit off at that high, but again, you know the market wants to rotate, so let that thing run for the final target up overhead. Now, here's a question for you. You know, sometimes we don't get that bear trap down there. Yeah, it's unfortunate, but sometimes there's so many buyers down here, it just whoop and runs right back up again. If it really V-bottoms off of the low, I'm going to make a very small but very important adjustment. And it goes like this. Step one, find a new channel by drawing off the highs and then bring that trend line down around that low. That will give me a new bull channel. A lot like I connected this high, that high there, right? Then bring it down around that low. Now, look what happened over here. We get below that low. This is what we call the first test is the best test. First test of that channel. So if we do see a V bottom off this low here, my goal will be to look left, find some prior swings, and I want that first test like we saw this afternoon, right? I want to get in below a prior swing, off the low of that channel, first test, the best test. Again, this would be a V bottom entry, and I'm buying just like I teach in the free video course, right? Get that strong green candle, closing back above the 21 EMA. That's my signal. A lot of examples of those inside our free video classes. In fact, hold on for a second, because I know most of you guys watching right now, you guys know these patterns already. You're making money with these already. But if you're watching for the first time right now, this might be a brand new entry tactic you've never heard before. So don't you worry though. I teach all these entry tactics in my free video courses. Everyone loves these free video classes. What I'll do is I'll put a link up top here for you, upper right hand corner, hit that link that popped up there, and take that free trading course, because the strategy I teach in that short video series will teach you a stupidly simple trick we use. You'll laugh and you'll see how simple it is. A simple trick we use in our members trade room that literally tells me exactly where the winning trades are going to be each day. More importantly though, you know this already, right? We make our money by timing good entries. So I want to teach you my 4 favorite entry tactics in that free video course. Guys, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries, if you've lost your confidence in your current strategy, hit that link that popped up there. You're going to love that free trading course. I'll provide you with a lot of trade examples, right, in that free course. Everyone loves them. The best part is it's completely free for you too. Also be aware too, guys, I'm going to put a bunch more important links below this video in the description of the YouTube video. Start first on that free video course, because if you're like most folks, you'll start making money all on your own, all from that free video course. So start there first. And don't forget, we trade together every morning in our trade room, 8 o'clock Eastern time. Come join us. I'll put that link below the description of the YouTube video. And if you're on Twitter or the X platform, I post a ton of charts and videos in between these YouTube videos. I post a lot on the X platform during the day. If you're on the X platform, give me a follow. Again, all the details will need to be there. The link description of this YouTube video. All right, so now you know where to go if you're watching here for the first time right now, because a lot of people, they don't know how to time bear traps. And I'll tell you, once you learn how to add to your winners, it will completely change the game for you, because you won't be forcing bad trades anymore. Once you know that a good entry, you can add to your winner and double your profits, that will change the entire game for you. Now here's an important question for you. Let's cover a couple more variations, and we'll go to the Nasdaq here and cover the Nasdaq here in a moment here as well. For example, sometimes we get, you'll notice down here, right, the measured move down here. What does that mean? Well, anytime we see a range breakout, I always look for a measured move. So oftentimes we'll see a range breakout that will pull back and go one more leg lower. And the breakout leg, this is very important, by the way, the breakout leg is a measuring leg. Okay, so imagine that measured move right there. Now, the reason why I mention this, the reason why I have that reminder there for me is because oftentimes what happens is we'll get that nice breakout pullback. I'll nail an easy 2-try bear trap. 1 try, 2 try. It's a nice, easy winner, but we'll pop up here. But every once in a while, I'll take my 1-to-1 first target. I'll get that stop moved up to point of entry. It's, risk is off, reward is got, right? Easy. But oftentimes, though, what happens is I'll get one more leg going lower here. Now, this is very important, so pay attention. Anywhere between that low and that measured move down there, right? Remember the measured move technique, the breakout leg, measured move, okay? Think about where that measured move is, okay? In this area right here, this is the money zone. It's kind of a bear trap zone, right? That's the money zone, right? It's underneath the low of the first breakout, and it's between that low and the measured move. This area right here, I call it the money zone because, really what it is, it's a bear trap zone. Because when this market makes another leg lower, all the rookies who don't use the hourly chart as their directional filter, right? When I was a rookie, I would let something like this fool me into thinking this is a reversal, but it's not a reversal, right? We saw how big that move higher was on the hourly chart, right? So I'm going to warn you right now, this move lower, this will feel like a reversal, but it's definitely not a reversal, right? It's simply a larger breakout pullback of that previous range. And again, it's a continuation of the breakout leg being the measuring leg. So in these situations, this is a gift to the buyers, right? You do not want to chase these and take these things short, right? Because you will get trapped on these the majority of the time here. Same thing, right? Same thing. Bears try once. Bears try twice. Now, again, you can try picking bottoms on this if you want. You can try to blindly buy this. You can waste a ton of time, like I did, on using divergence or reading tape or all the other indicators that want to sell you these days here online here. But none of them work as well, right, as traps, right? Trap in those bears, run those stops. And I'm telling you right now, once you learn how to use traps with these breakout pullbacks like this, your next step is you must get more comfortable adding to your winners. Again, once you start adding to your winners, the game changes because now you can wait for, you know what I mean? You don't have to trade more often. Just wait for your best trade, right? Like a breakout pullback or a measured move, and then add to your winner, right? You're not looking and diluting yourself by taking different setups, different markets. Put more money to work at your best setups. And again, you'll love, I teach a lot more of this inside of that free video course. Now here's a question. We have one last question. We'll get to the Nasdaq in a moment here. Here's one more question. What if we don't see a big pullback right now? So a few weeks ago, we talked about this thing in trading, which is called buy the rumor, sell the news, right? Buy the rumor, sell the news. Have you heard this before, right? Buy the rumor, sell the news. Well, I mentioned this because we may keep grinding higher here. The rumor going around right now is is that Jay Powell has backed himself into a corner now. He delayed way too long cutting rates, and now he has no choice but to cut rates by a 50 basis point on Wednesday, an emergency rate cut, right? I personally think that's going to happen on Wednesday. So the rumor might be a bigger rate cut coming this week. Now think about this, right? What happens is when markets when they get word of a rumor, the markets like to price in, right? So if the markets begin to think that we're going to get a rate cut, a bigger rate cut than expected on Wednesday, what's going to happen is we're not going to get these deep pullbacks. What's going to happen is we're going to wind up getting like over here, right? Getting in under prior swings. So we may want a couple of things here right now. We may wind up running higher here. We'll cover that in a moment here as well. We may not get that either. We may end up getting a shallow pullback here. Now, shallow pullbacks, what's the challenge on a shallow pullback? A shallow pullback, I'm not buying low. My risk reward ratio is not that great. So one small adjustment on a shallow pullback. And again, if we keep on grinding higher, this will be our way to do it, right? Okay, so watch closely here. Bears once, higher high, bears twice, get in underneath a prior swing. Okay, by the way, this pattern right there, that pattern is the exact same pattern I show you here, right? We go up, pull back. It's just a different variation of it, right? It's the same exact pattern, right? It's a higher high in price, move up a little low. Same pattern, right? Same pattern, okay? So on this one, now, this could be below this swing. It could be below this swing right here, right? So for example, as we go higher here, it might be this swing right here, right? As we go higher, if we don't get that deep pullback right now, again, could be here, below that low, bears once, bears twice, bear trap right there, right? Maybe we start going higher here. We start going higher below that low, right? Bears once, bears twice right there, right? So again, if all we get is below these prior swings, shallow pullbacks right now, you want to look for this pattern right here, pulling back, bears once, higher high, bears twice, and below that prior swing. This is the shallow pullback dream entry right here, right? You'll see them everywhere. Once you start finding these patterns, you'll see them everywhere on this chart. The final thing right now is, do not be surprised if we run up and then get crushed right back down again. Again, because we know that pendulum swing is above us here. Now, question for you, how would I sell this thing back down again? Well, first of all, it goes against the overall directional bias, so it's by definition, it's a lower probability trade here. So in short, how would I sell off the high here though? It'd be a crown reversal pattern. A crown reversal pattern. It's buyers trying once, lower low, buyers trying twice. This is the only pattern I trust when I'm going against the overall direction on the higher time frame. These trades, by the way, these are half-size trades for me, right? Because they're not going to be nearly as reliable as the ones going with the trend. And again, the amount above, the amount below, that will tell you now where your target is. And then once we get that target hit, you know what I'm going to say, right? It's that same bears once, bears twice, trap them in, and run back up again. But again, I do need to be a little more cautious selling off the high. So that trade may not be for everybody, especially for folks who are not consistently profitable going with the direction on the hourly time frame. And last but not least, and we'll grab the Nasdaq, last but not least here, if we break out and go higher, what do? We use ranges for breakout pullbacks. Now, the trick to this will be very important, guys. If we break out and we start seeing separation away from that moving average and I break the pendulum swing, right? Again, if we start seeing separation, that means strength. If we break through the pendulum swing, that means breakout, right? Okay, so if we get those two components now that prior range now, what do? We wait for a pullback. Do we pick a bottom on this? No, we never do, right? We trap the bears in, bears once, bears twice, bear trap, and back up to retest the high. This doesn't seem as likely for tomorrow, but hey, I don't have a crystal ball for tomorrow. I don't predict the future. But if we do go higher here, though, that's the game plan, right? But again, make sure we break the pendulum swing. Make sure we get good separation, like over here, good separation. That will tell you now that buying that breakout pullback is a good idea. If not, it'll go up and come crashing back down. We can use the amount above, the amount below, and trade that breakout pullback, like I mentioned there before. All right, S&P, pretty straightforward game plan here right now on that breakout pullback, along with some different variations in case things do keep on grinding, going higher here. How about some Nasdaq right now? Nasdaq is very similar to the S&P, but I think you'll see in a moment here. It's a little bit different though in all the right ways. If you ask my opinion, first things first in the Nasdaq right now, it is easy to see we're bullish overall right now on the Nasdaq. Remember, don't confuse this. Use the hourly chart as your directional filter. And whatever you do, do not let a deep pullback on the tick charts, do not let that fool you into thinking this is a reversal, right? Because think about this. Look at how big that move has been in September. Yeah, so much for red September, huh? But September has been this huge move going higher. So a deep pullback is a gift right now, right? So don't lose sight of that when things get wild on the tick charts. Now, speaking of tick charts, before we dive in and talk entries in the Nasdaq for tomorrow, if you're enjoying tonight's video, please help me grow this channel by hitting that like button. Make sure you subscribe. Share this video with other buddies who want to benefit from this strategy as well. Guys, I know we're all busy people these days. I appreciate you all watching my videos. So as always, thank you guys so much for the likes, the subs, all the ongoing support. And I promise I'm done wasting time here. Let's dive in right now and talk about the Nasdaq. I can see two really big clues right now on the Nasdaq. First clue are these prior ranges, right? There's a range right there and a beautiful range back there. So what does that tell us? Well, first of all, breakout pullback zone, 24,391. The bigger breakout pullback zone, my dream breakout pullback zone, is down around that 24,297 and some change here. So we already know that a big pullback right now into that breakout pullback zone, that will be gorgeous. We also know, right, if all hell breaks loose this week at some point and this thing tumbles and goes lower, is it a full reversal? Probably not. It's probably simply a breakout pullback off that previous range, off that prior all-time high. So a lot to think about there for the breakout pullbacks. But now, there's one more valuable clue here right now on this NASDAQ. Look at how we're grinding higher. We pop up and look at that. There's that separation again, right? See that? Remember, separation, what does separation tell us? It tells us strength. It doesn't matter how fast the market is moving, all right? Speed of the price action does not matter in this situation. All that matters is it's separating. When it pulls back, it doesn't pull back all the way to the moving average, okay? So a strong move has nothing to do with speed of the move. It's all about separating off the moving average. And again, why is a strong move so important? Because a strong move says all of this momentum now is going to want to pull back and retest off that high, right? That is why strong moves are important, all right? Now, the grinding movement, the grinding price action is a really big clue right now, because anytime we see a market that's grinding higher, we know that buyers are waiting underneath these prior swings. So for example, right now, my favorite swing right now is that 24,472, because it gives us a way to buy relatively low. So we've talked about a lot of this stuff already, haven't we? Okay, so a shallow pullback. If we see a shallow pullback right now, what's my concern? My concern is I'm buying relatively high. And again, we know that breakout pullbacks are so darn consistent. They're so common, right? So we have to we gotta be careful on any shallow pullback, because we know that breakout pullback zone is begging to get hit. So a shallow pullback, remind me again, what's the entry pattern? It's a technical bear trap. It's a pullback once, higher high, twice. Now again, a technical bear trap, I need to get in underneath a prior swing. Higher high, underneath a prior swing, and of course, after a technical bear trap. If we start seeing a shallow pullback going higher there, again, that tells me now to add to my winner. I'll tell you, if you want an almost bulletproof entry pattern, take a screenshot of this chart right now. A technical bear trap and an add-on. They're basically the same exact pattern, right? They're a higher high in price, right below that low. If you like money, I would definitely recommend learning that pattern. And a lot of examples of that, how we apply this in our trade room in that free video course. So a bear trap, an add-on, and again, we're going higher from there. Now, right, we may not just get that bear trap down there. We might get a nice deeper pullback here. Now, again, this will feel like a reversal, but again, we're not going to use the tick chart for reversals. We use the hourly chart for reversals, right? So as this sucker runs lower here now, when all the rookies out there say, oh, it's different this time, right? This is the pullback that ends all pullbacks. It's probably not. Right? Wait for the pullback here. Bears try once. Now remember, on this one, I can be a lot more aggressive on this one, right? Because my risk and my reward are a lot more attractive on this one. Now, would I complain about a technical bear trap, right? Would I be upset about an entry below that? Of course not, right? Those are the best ones. Getting in underneath the prior swing, always the best ones. But a lot of times we don't get that. A lot of times it pulls back here, stops are sitting right there, right? And now I can just juice those stops and run right back up to retest that high. And again, in this situation, now we have all that open space now, right? So now add to that winner separation off the moving average, higher high in price. I'll tell you right now, that's a fantastic way to add to our winner for tomorrow. Target, of course, is back up to retest that high here. So shallow pullback, technical traps, deeper pullback, two try traps, add-on trade back up to retest the high here. Okay, now, if we keep grinding, right? If we keep grinding, let's say we keep on grinding going higher here. All of these levels now are ripe for that pullback. Remember, shallow pullback, right? Shallow pullback trap. And then remind me again here, what if we go sideways here, right? What if it goes sideways? What if this thing starts to clam up here overnight, right? What if we start going sideways up here? What do we do in that situation? We use symmetry, right? I want to get below get below the range here. I would love, by the way, get a range up here, combine that channel. I mean, come on, right? That would be fantastic. So use that range as a magnet. Look for rotation. It's that same bear trap once, twice. And again, where does it want to go? It wants to go not just back to retest the high. This is why ranges are a lot more lucrative for us in our trade room, because now we know, right? It wants to go where? It wants to go back to the pendulum swing, symmetry on the other side of that trading range, right? Makes sense? Or don't forget, this is a tough one. If we go sideways overnight, remember, if we go higher first, be very careful going higher here, because a lot of times it'll snap right back down again. This will feel like a reversal, but again, it's not a reversal. It's a range rotation, isn't it? Above the high, below that low. That's our target, by the way, right? That's our crown reversal target, right? Buyers once, lower low, buyers twice. Again, careful this one though. This is more aggressive, right? That's your bull trap off the high. We call these crown reversals. You'll learn that in the video course. And again, the amount above and below, that's our profit target now. And then what? Yes, do it again, right? Do it again. Now again, we're not going to pick a bottom on this. It may really collapse down, but once it pulls back, bears once, bears twice, squeeze those stops and let that sucker run, right? Trade that rotation up, down, up, back and forth. Keep trading that rotation to find your winner. All right, guys? Well, I'm excited for tomorrow. Big day coming tomorrow. One of the last days tomorrow before the FOMC announcement on Wednesday. That's my game plan. What do you think, guys? Would love to know your feedback. What's your game plan tomorrow? Let me know in the comment section below of this video. But now, speaking of tomorrow, too, 8 o'clock Eastern time. Guys, I can't think of any better way to learn this stuff than to do it with us, learn along, trade along every morning at the opening bell. I'll put all the important links you guys need below the video tonight. Start first on that free video course. You're going to love all the trade examples I include in that video series. Then come join me in the trade room, and we'll do it together every morning at the opening bell. In the meantime, guys, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.